And good evening, everybody. This is Michael Filighera. I am with LogicalSignals.com and also TradersHelpingTraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Wednesday, March 4th, 2021. The NASDAQ remains within its box, but it is making progress and likely towards a very volatile conclusion. And the volatility really kind of kicked up today. And it doesn't appear this way on the chart. But I'm going to get to that in a minute. I just kind of want to talk about real quick an update on anything in the count. And so far, everything remains in place. The minor 3, the minor 4, we remain in this minor wave 5 rally. And I still believe that we are now within that last minute wave 5 to complete minor wave 5 and on up. So I think we're getting closer and closer, but I don't think we're totally there yet. And here's what I want to add. So far within this minute 5, I have felt that and counting as that we had minute, subminute wave 1 and subminute wave 2. And then that would put us in a subminute wave or a subminute wave 3, which is subdividing. So again, the market would need to explode higher. And it started to do that today and then died and then tried it again and then died. So those continued failures bring about a situation where this entire, a little bit larger, minute 5th wave is forming its own triangle. And that's going to just wedge its way up to a point. And what this really does, it just produces a very dramatic end to this whole affair of getting up here for the last 13 years where we're trying to get up to this point. And so there's a lot of energy on both sides of the market to get there. So it could be forming a triangle. And that would suggest then that this wave 1 is completing up here. And that we still have a wave 2 to do. And that wave 2 will be a ABC structure all on its own and also stay within the box. So we're still looking, we still may remain in here. The difference is going to be that a wave 2 should be just as dynamic as we just had. This downdraft, these big updrafts and this big downdraft. It's going to be an ABC. It should be a zigzag. So in other words, it's just going to be boom, boom, boom. It should not take forever to get there. So we may see some volatility tomorrow if this is indeed the count. So here's where we sit. Either it starts to break hard down or it breaks hard up. That's where we're getting in the whole scenario. So that's producing a lot of additional volatility. So I want to tell you, as a trading tool, volatility is your friend. Why? Because it's going to produce larger moves. The problem is that along with that volatility, you get a lot of fits and starts as it works its way up there. Because if the volatility is kicking up on the buy side, it's going to kick up on the sell side. So they're all going to come in to want to sell at a particular point. They all want to buy it at another particular point, and the battle goes on. Eventually, one side will prevail, but the other side is likely to come back in because of the nature of the move that we're looking for. So what's going to change that? If indeed the buyers prevail and the sellers step aside and say, let it happen, then yes. But the market from here, if indeed this is going to be a continuation of that third wave, no more fooling around. It's time, go. You've done the 1, the 2, and you're in the 3, and at best, it's subdividing again. So we have 1, 2, 1, 2. That's all within the third. So it should explode higher if that's the count. Otherwise, it's not, and it's going to, and then it should move sharply lower because it would be 1, 2, boom, come on. Oops, sorry about that. And it's just going to plow its way lower. Start breaking these moving averages very quickly. And then I would expect it to break below. This is the 30 minutes. So if I go back out to the hourly, it's going to be a little bit lower. I would expect it to break the hourly moving average, the 200-day moving average. I would expect it to break it and head on back towards 14,811. It could drop here, it could drop, there's all kinds of points it's going to be able to get itself to. And I'll put some on there right now. And it's going to form 3 waves. So that's the other key that what's going on right now. That if indeed this is a 3-wave for wave 1, then it's forming a triangle. So it was a 5, 3, 5. That's what we got going on. So the next one is going to likely be a 5, 3, 5, but going down. Then the third would be a 5, 3, 5 going up, et cetera, et cetera. The fourth might be just a little flat, who knows? But the 5 will also be a 5, 3, 5 going up. So that throws a little bit of a twist, but in the finishing move, in the absolute finishing move, very common. And it should wedge. So in other words, in this case, because we're still going up, the buyer should prevail and push harder than those sellers, but it will be volatile as we get there. Okay, so in volatile, also in terms of like if the buyers just move in and they're taking it, it's just going to go. And remember, because then we have the other factor that we're into uncharted waters is once we start getting above these highs. We're again in uncharted water. So therefore, what do we have to go on? Nothing but the Fibonacci's. And we've already run those. We have those going up. We have next lines at 15,160, then 15,220, 241, 301, 360, 460. We have numbers all the way up. So those stay in place. What we now need to deal with is like the possibility, if it is indeed a 3-wave 1, that we've got this wedge building. If not, then it's 1 and the 2, and this has got to go. Okay, so that's the deal. And tomorrow, when you're dealing with this volatility, and that's something I want to do. I'm going to first take this one, I believe. Yes. Okay. I want to take this down to a 5-minute chart, basically. And what I want to show you is today. This was the first thing this morning. That's the 5-minute chart. You see the 2 and the 1. This is volatility. This is destructive because it didn't just all at once go boom. It boom, 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 boom. It fought its way all the way up, all the way down. It ended up down there. So on a 5-minute trade, it worked great, but you had to sit through big swings in the other direction. So you might have been up 1,000 on a trade and suddenly it swung back and you just gave back 600 or more. And then it swung lower again. So the volatility really does create a situation where you need to make adjustments to, number one, your risk parameters. What's your profile for a market like this? What are you willing to risk and what's your size if you're going to move in and out of this market? And what type of trade are you on? Because with volatility, you get increased risk, but also it increases your targets because in most cases, it will get down there. But you might have to shrink it up a little bit. So in other words, if you're up $1,000 to $1,200 in one trade, you might want to take that. If it's still going to go in the same direction, you can always re-enter. Don't be worried about commissions when you're making that kind of money. But your risk profile is going to have to be really shuffled around to fit, number one, your account size, number two, your goals, and how you're going to do that in a market that's moving at $10, $15, $20 at a clip, particularly in the morning in these first hour and a half. Boom. And eventually you can see, the sellers had control down to there, but look who stepped in. And when they did, they took it from 14,997 and they didn't stop until it got up to 32. So they quickly ran it in 5 minutes, $30, $35. And it pretty much was that just buy it because they're taking it. And when your next sellers come in fact, that actually didn't stop there. It got higher, up to 36. Then they sold it off. And you can just see these huge swings. So you have to be able to look at that, look at your risk, look at what you're willing to give. So if you're making the larger money, then you're going to be able to risk a little bit more. But if you're only looking to make $100 a trade, well, technically you should risk more than 100. You're going to lose a lot more hundreds as you're waiting to make that 100. So that risk reward is not going to balance itself out. So you're gonna have to make adjustments to your risk reward calculations of how much you're willing to put down for risk. So for tomorrow, we should be looking for what I just described. Upside from here should ignite. Of course, we're gonna have to wait for the Asian markets, the European markets, and we get back online tomorrow morning. But it should begin to go nonstop. There were many times today that that's what it felt like it was going to do. In fact, you know, the NASDAQ remained higher pretty much the whole day against the Dow, which wanted to go down, 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 and that was dragging the S&P. So there was that contra movement in the market that they weren't in sync, all selling at the same time, all buying at the same time. So there's that factor as well. So, but in the NASDAQ, it would need to ignite. Failure, then it should ignite going in the other direction, because we're going to move this up to here. Because if this is a third, it needs to keep going. To stop here, no. That's why I would move the 1. Because it leaves it as a 3. If this starts to come down and go below that, no. It really can't now. And I can be able to decide what it is. I think if anything, 1, 2, 1, 2, but it should still, this 2 should not take out 15,000. So there's a lot of breakers on the way, but trade what's in front of you. Trade according to moving averages. Worry about your count later. We have our points. Work with those and then use your moving averages to trade up to that level. And then if you start breaking out, you got your next level. Believe it. This is the other thing. Believe the level. You might have some minor points in between, but if it's starting to break, that's your next point. And algorithms are already programmed to buy it probably up to there. They might be programmed to buy it up to here. Who knows? You have your points. You can add additional. We can, a downside where you can put an additional retracement level from the bottom of the wave 1 to what would then be the top of that wave 1 if it doesn't get above you. So there's all things where you can fill in your blanks. Trade wisely. I'm going to end it there. I don't want to get on too long. Trade wisely. Trade usually moving averages. Use the support and resistance it's given and fill in your blanks. Tomorrow's update is next up. Sorry. Good night.